There we go, ladies and gentlemen. We are live. Welcome to Dream Chasers Interviews with the Future. I'm your host, Adam Carswell, joined today by Brian C. Adams of Excelsior Capital. We've got a fun one here for you today, and fun one. We're gonna go ahead and dive into the fun or funny part, or maybe even the lesson that you can learn from this moment. I remember when Brian's his marketing side of the business, or his face of the business, hit the scene in maybe 29, we'll call it 2019. And he was popping up everywhere on everyone's podcast. I saw his email campaign for him to go and guest on people's podcasts. And Brian, I'll be honest, I was looking at you at the time, like, man, maybe a cool guy, but I don't want to be just another podcast that this guy got to go on tour on. I want it to be a special moment. And this guy, ladies and gentlemen, probably followed up with me. I don't know how many times, at least we'll call it 4, but it's probably more times to come on Dream Chasers. And here we are, 2022, coming into Q2 to be specific. And we're finally bringing him on. And it's just a message of persistence. And Brian, I'm sorry if I was ever mean to you. I just wanted to make sure we had a special time together. So pass the mic to you as we break things in here.
Yeah, after being in the capital raising business for over a decade now, I don't take anything personally. And it is a good lesson. Thoughtful persistence does pay off. I have something that I use when I hire somebody, or when I'm potentially hiring somebody. They'll come in, we'll do a call, a coffee, younger person especially, and I'll say, hey, shoot me a note or give me a call in 75 days or in 72 days. I'll pick a random number and I'll put a tickler on the calendar. And it's incredible how few people actually follow up on the exact time and date that you want them to. But the ones that do, you realize in this business, they're probably going to be successful. So,
yeah, wow, I like that. The follow-up piece, regardless of where you're at in your career, really can take you super, super far. But I have not heard the, hit me in 75 days approach. So I think I'm going to add that one to my toolbox as well.
I mean, we're in the business of raising capital and sourcing opportunities, right? And if you're not going to be thoughtfully persistent, it's going to be very challenging for you to be successful long-term in this industry.
Yeah. So I guess let's talk about that here briefly, get to know you a little bit for our audience. You've been in this sector, as you mentioned, for about a decade, had some ups, some downs, some awesome lessons to learn, maybe some painful mistakes that turned into, the success that you're seeing here in your business today. So, give us the rundown. Who is Brian C. Adams? And maybe not, as I asked that question, I'm like, you know what, let's like really get to know him too before we dive into the business piece. But I mean, where'd you come from? were you born? Athlete, anything like that? Like, tell us like who you really are, and then we'll cover the business stuff.
Yeah, I'll give you kind of a little bit more in-depth spiel than I typically do on the intro. So I'm from upstate New York. If you look at a map, part of the world where New York, Massachusetts, and Vermont all meet, I'm from the New York side. So pretty close to Canada. My family's been up there since the 17th century. So long time. Great place to grow up. Not really a fun place to be in your 20s and 30s, right? Albany is about 45 minutes away. So my dad is retired now, but was what I would term a country lawyer, a gentleman farmer. So he was an attorney, but we had a big piece of land, and he would screw around on that on the weekends. I went to an all boys military school in Albany for middle school and high school. It was a great experience for me. It's not for everybody. But I was an athlete, so I played hockey and lacrosse. It was a very small school and very much oriented towards athletics. And I went to my college guidance counselor and I said, this has been great. I've really enjoyed my time here, but I want something totally different. I want a completely different experience than what I've had the last 6 years. And I want to be able to play lacrosse collegiately. So he pointed me in the direction of a small liberal arts school in Connecticut, which was way out on the spectrum on the other side from what I'd had, in this conservative military school. And ended up going there, playing, had a ton of fun, a lot of success, loved being a collegiate athlete. I met my wife there. So my wife, who's from Nashville, also went to Wesleyan University. We did the Northeast thing for a little bit. We both went to grad school up in Boston. And then, like every Nashville girl, she wanted to move back home. So we moved to Nashville in 2007, where her family, for the most part, still is. She got into a PhD program, and I was frankly kind of wanted a change of scenery from the Northeast. It can be a little bit, insular in many ways, even though many people kind of pose as very liberal, forward-thinking people. Oftentimes they don't go anywhere outside of 50 miles from where they grew up. And so Nashville seemed like a really cool place. It wasn't what it is today, but it was kind of becoming that. And moved to town. I practiced law. I was a prosecutor, which might strike people as a little bit odd. But I was in the vehicular crimes unit. So I would try anything from an open container to DUI to vehicular manslaughter, vehicular homicide. I did that for 4 years. I had the opportunity to learn about commercial real estate, private equity through my wife's family, which has a single family office here in Nashville. And so when I joined the board as an ex officio member, I got exposure to the investments you're making and learned about private equity and what a family office even was. I had no idea. I didn't grow up in that world. And I was not a finance guy in school. So I knew I threw a lot at you right there, but that's kind of the unabridged version of how I got to Middle Tennessee and in the real estate business.
Yeah, no, I'm appreciative of it because it adds, everything makes so much more sense now too. As you were telling the story, I'm like, okay, how did he kind of get to where he's at now, especially having the prosecutor background? It sounds like, so your wife grew up in this environment and you didn't really have a feel for, what it looked like until you moved to Nashville.
Yeah, I mean, I had a very high level understanding of stocks and bonds and the markets, but money was not something we talked about within my family household growing up. Very kind of old school, white Anglo-Saxon Protestant. We didn't divulge. I mean, I still don't know how much money my parents have. I have no clue. And so it just wasn't something we talked about openly. And it was always about kind of, for me, it was the liberal arts focus. And then obviously law school gave me a sense of how credit worked, right? How leverage worked, especially within the real estate sector, which I think is fundamental to the US economy. Just this idea that we can take real assets and take debt out on them as collateral. When you travel to third worlds, you realize that that's a pretty special thing. And it allows our entire economy to go in many ways. But I mean, private equity, venture capital, family office, syndication, these are all things that were completely foreign to me until I joined the family.
Yeah. Okay. So there's so many different directions we can go here now. And I guess one, I want to say, I'm happy to hear that you're a fellow Division III NCAA athlete as well. I played hoops and ran track for 4 years at a liberal arts school in Pennsylvania. So that's awesome. And it is interesting how having that athletic background, you don't realize it until you're done, just how much of an influence that plays in the rest of your life. I'm sure you've had moments where you've had to be mentally strong or whatever it may be, and you go, oh, this is like, how they do, is it periods in lacrosse?
Quarters, but yeah,
it's like is it 4 quarters?
Yeah.
I should know this. Yeah, I know lacrosse is like the holy grail from the Northeast as well. But yeah, but yeah, you have those ones. Man, it's like the 4th quarter in that game that I played, when I was 20. So,
and I think especially now that I'm a business owner, an employer, and a father, I've got 2 boys who are 9 and 6. I love hiring Division III athletes or folks that played club, or maybe they're a D1 athlete in a sport that they don't have the opportunity to go pro in, right? Because for you to take 20 hours plus a week out of your day to do something that is hard, that's competitive, that you may not be able to start in or get any kind of field time, I think that goes to kind of your fundamental character as a person, right? I mean, you love the competition, you love the grind, you're trying to better yourself within a team construct. I mean, those are all things that are really translatable into the business environment. And so I love people who have that background because I think they go on to be really strong employees and understand this dynamic that happens, especially within smaller companies where you're called upon to maybe do some things that aren't necessarily within your scope of work.
Yeah, so true. So one term we've used a couple of times here, and I want to unpack it for those who are maybe a little bit newer to it, but we've talked about family offices. So could you just in 30 seconds kind of explain to our audience, what is a family office?
Sure. And I'll use the cliche that everybody uses, but once you've met one family office, you've met one family office. Um, the way I definition that I use is a family office is a corpus of assets. So a bucket of money controlled by one family group that is meant to sustain a quality of life over multiple generational time horizon and to avoid paying taxes.
I like that. I actually haven't heard it broken down that way either. I feel like that just gave me more clarity on how to explain.
Well, I think it's a really misunderstood term. It gets thrown around a lot. It's become kind of de rigueur to have a family office or to say you're pitching a family office or have an LP that's a family office. But I don't think many people understand how this works fundamentally, because if you break it down, say you've got $100 million, whatever the number is, you tack in inflation. So that's, recently it's 7%, but let's call it 3% historical average. Plus you've got your operating expenses, your overhead, your costs to maintain that quality of life, the beach house, the country club, the travel, the internal kind of investment professionals. Peg that at 4%, 5% is your spend rate. And then you have this exponentially growing family, right? People tend to have children who tend to have children. So if you have 2 or 3 kids, they have 2 or 3 kids. Next thing you know, you're talking about 10, 12 plus households that you're looking to support. It's a very challenging thing when you put the math there. You're trying to hit double-digit returns annually. That's hard for the best hedge funds in the world to repeat. So I think it's a misunderstood term. I think it's more of a challenge than people realize. And it's also a mindset, right? There's many high net worth individuals and families that want the number to be 0 when they pass away. They want to give it all away, or they don't want to necessarily create multi-generational wealth for whatever reason. They want their kids to be more entrepreneurial or et cetera, which is all fine. So I think it's very much a culture, a mindset, and also an investment strategy, kind of all wrapped into one.
Yeah. Wow. Very, very well broken down. And I think the piece that for whatever reason I never really thought of, which is the purpose of it, which is to maintain a quality of life or a quality of living over multiple generations. And from the get-go, and if you're looking into starting your own family office or building your own, you also have to have that clarity, as you mentioned. Do you want to end at 0 and give it all away, or do you want to create something that now I'm also hearing might be a little bit more work in maintaining than some people think?
and you're also essentially creating a small business, right? And 90% of small businesses in America fail within 3 years. So not only do you have the investment struggles, like you've got to hit these really tough returns, and you've also got to keep the family together. The families are crazy. People are crazy. They're unpredictable. They're irrational. That's hard. But then you've also got to run this small business, which if you're an entrepreneur, you understand there's a lot of work.
Yeah. Okay. The topic of this call was not supposed to be family office.
It's okay.
There you go. So there we go. We got the context. As far as your story with Excelsior Capital, and you mentioned over the past decade, there's another business venture that you pursued there collectively. If you estimate it's about $500 million in assets under management. We know on the back end you shared it. He's like, yeah, maybe it's a little bit more sexy than it really is, but that is pretty accurate, right? So tell us about the $500 million under management. What's the story there, and what are you guys working on now?
Yeah. And, I appreciate the way you framed that up. I'm not a big vanity metric person, but I've been doing this a long time, and, I've had some success, certainly had some struggles. I initially got into the business because I saw an issue within our family. And then once I started meeting other families or individuals, I realized this was a consistent theme in this population, which is namely ability to find good, attractive, compelling, direct co-investment opportunities on a deal-by-deal basis within the real estate sector. Our family oftentimes only had access to something through a fund of funds vehicle, which there's a lot of fees. There's no transparency. There's no relationship to the GP. Or we could go to a REIT. I think it's a really suboptimal way to invest into real estate for many different reasons. Or there was a one-off deal brought to you by a friend from your country club or your social network. And it was, very much not an institutional type experience. So I really wanted to marry this kind of what I found is maybe call it upper Main Street problem with a Wall Street type experience. So initially it was to source opportunities for the family. We had some success there, and then it became friends and family, and then it became a broader network of investors. That was the first company, this initial iteration of the firm, Excelsior Capital. We built a portfolio of, call it 250 to 300 million of assets under management, which basically means what you bought all the stuff for on a cost basis. And it went great. I mean, I think I solved this issue in terms of the product that people wanted, right? This direct co-investments, cash yielding, very tax efficient type investments. And we had a lot of appetite. What I really failed to do, and what I would caution people against doing, is I fell into a very typical trap of becoming a deal guy, right? So I was focused on the acquisitions, the investment side. I didn't appreciate the idea or the fact that you need to have this small business infrastructure around the investments to make the company work, right? So investor relations, reporting, communications, bookkeeping, accounting, tax, audit, all of these things were put on the back burner, frankly, because we were so focused on acquisitions, and it all kind of caught up to you at once. I mean, Hemingway says, famously that the way he went bankrupt was very slowly, then all at once. And so like it all happened very quickly. We hit this tipping point. And so I got my teeth kicked in for about a year or two by the LPs. We were able to have a good outcome, but it was a challenging space. But I think it ultimately led me to be a much better manager.
Yeah. Wow. Okay. So that is powerful, especially for those tuned in who might be a little bit earlier on in their, say, capital raising journey. Sometimes the best way to learn it is what you outlined, which is to just live it yourself. Obviously, we're all in this game to maybe see what we can do to avoid situations like that. So for the former Brian, or, the capital raiser who could be in the same shoes that you kind of just outlined there, what's something that you can recommend that they start paying attention to that you're paying attention to now?
Yeah, I mean, the first advice, we don't have enough time to go into all the mistakes, but some highlights, right? Definitely use 2 ears and 1 mouth. And by that, I mean, actually listen to your LPs, your limited partners, your investors, and the prospective investors that you're talking to. Ask them what they want. Ask them to draw a picture of how they want to be pitched, how they want the deals to be presented, when they want them to be presented, the format, the return profile, the allocation, the legal structure. I mean, there's really no detail too small here. And instead of cramming down this, beautiful piece of art in terms of this deal that you found down their throats in a very slipshod, haphazard fashion, bring them a solution set to their problems. I think early on in my career, I really thought that, these urban infill things I was finding in Nashville were great, and they turned out to be fine, but actually really wasn't what my network wanted. They wanted stable cash flow. They wanted depreciation. They wanted lower minimums. They wanted just direct deal by deal co-investment. And so when I finally started giving them that and started framing the conversation as, hey, I listened to what you wanted. Here's something that I think might be able to help you. It really allowed my capital raising to increase, exponentially.
Yeah. So I'm curious how another recommendation then would be, how do you go about doing that? Meaning, were you sending surveys out to your group? Were you just doing phone calls with them and asking them questions? How do you go about polling anywhere from a database of 10 to 100 investors? It's got to be scalable too, right?
Yeah. So I actually did a presentation about this. We can share it in the show notes.
Sure.
I think early on in your career, if you have this idea that you want to be an entrepreneur or a sponsor, whatever the widget is that you're selling, before you kind of jump into it, I would take a month and list out 100 people that are within your network. I would start as the most affluent, sophisticated investor. Then I would go down to the least. It's not a judgment about them as people. This is just kind of the business we're in. And I would go have coffee with them, or a Zoom or a phone call. And I'd work your way from 1 to 100. And I would take all these notes, right? If they have invested in commercial real estate, what did they like about the deal? What did they not like about the deal? What did the sponsor do that they found positive? What was the negative experience? And you're kind of just collating all of this data, right? And you're sifting through it. You're doing these 100 meetings, calls, Zooms, et cetera. And if you really focus, you could probably do it in 30 days. And then you've got a really good sense of what this group wants, right? And these are people that conceivably, if they're going to take time to meet with you, they'll probably give you their time and resources in return for your widget, which is kind of the relationship we're talking about. And I think importantly, it'll also reset your expectations. I've seen a lot of folks get into this business out of the box. They come in with like $100 million multifamily development deal in Austin, Texas. And, they don't really have a great investor network. Biggest fallacy going in the business is that if it's a good deal, you raise on it. And you know that better than anyone. You're in the Raise Masters business. You guys do a phenomenal job. You've got to pre-market and pre-sell your audience and bring them something that they want. Otherwise, you're going to be shouting into the wind. And so I would take the time to do it. And also importantly, ask allocations. And this is where you've got to look yourself in the mirror and realize, you can grow your network beyond who you know, but like the deal size has got to be commensurate with what you think you can actually raise. And we could talk about conversion rates and ratios, but I mean, we're in the business of being told no. So you've got to have a little bit of a reality check there as well.
Yeah. Okay. I just want to ride that wave right there. We're in the business of being told no. I unpacked this in an interview I did recently with Tyler Lyons. I don't know. Are you familiar with who Tyler is yet? He's our new COO at Excelsior Capital. So
no,
definitely someone, if you remind me, I'll get you connected with him because he's awesome. But, just maximum output and not being afraid to receive that no. I think before we hit record, or maybe it was on this interview, you can remind me, but, out of a database of say 5,000 contacts, when 50 of those 5,000 move forward, that's enough to get the job done. So that's 4,500 no's. So just kind of elaborate a little bit further on how you've leveraged no to get yourself to the next level. Just, I want to say in general, but I guess I do want to keep it on topic at the same time. So yeah, in regards to the capital raising side of the business, like how are you leveraging the no?
Yeah. So when I talk to young entrepreneurs or sponsors and we kind of go through this raise that they're trying to launch, I say, well, how many people are you planning to reach out to, and whatever number they throw out there. So, okay, well, they're these folks within your first degree connection network, or these people that like you've got their cell phone, you know them, you've talked to them, you've known them for a couple of years, they're close. And if they say yes, I'm like, all right, well, I think a 3 to 5% conversion rate is probably realistic here, especially if you're out of the box, right? Your first opportunity, first investment. And then we kind of break the math down. I'm like, well, so these folks can be able to write a $50,000 check, $100,000 check, $1 million check. And we kind of go through this process, and they realize really quickly, like, wow, I'm not set up for success here, right? Because you've got to realize that if you're dealing with individuals and families, they can be unpredictable, right? And the downside of syndication is you never know who's in a position to allocate, right? This is not the institutional space where those investment entities are allocators. They wake up in the morning and they think, okay, I've got to put X amount of money to work this day, week, month, quarter, year. Where's my best risk adjusted return within my broader allocation? What's my OCIO and my advisors telling me? It's not how individuals and families think. Even if they are ultra high net worth, they're emotional and they have other things going on in their lives. They probably have a full-time job. And so you've got to appreciate that. And where I'll segue this is a big mistake I made early in my career was thinking that people wanted to hear me pontificate about a deal for an hour or 2 hours over a torturous phone call or steak dinner in person. And what COVID made me realize is I need to be more empathetic and more efficient with my investors' time. And so we started to put together these investment packages, and the way that we present the opportunities now, they're much more digestible. They're much more time efficient, and they really empower the investor to give them all the information they need to make the decision, the allocation in a very short amount of time. And that's been a big shift for us. And I think that's also really helped us bring in some really great new investors as well.
Yeah, the time efficiency piece is exponentially valuable. What do you think is maybe a hack or a secret that you found out in regards to saving more time while scaling your business? Well, yeah, if you had something coming to mind on that topic, like what's coming to mind Could you share it with us?
Yeah, I think a lot of folks look down on marketing and sales. They just want to be commercial real estate professionals. And I get it. But the reality is, you don't want to be the world's best kept secret. And if you tell the world what your story is, you tell them what you do, who you work with, they're going to opt in. They're going to say, I like Brian, I like his story, I want yield, whatever. Okay, I'm going to opt into his ecosystem. Okay, great. Once you opt in, I don't need to rehash my pitch every time. Like I'm as you said, I'm all over the place, like probably too much, right? But people get to know me, they can understand me, they can listen to a podcast, they can read a blog, they can see me on LinkedIn, and they can do that on their time. So then once they opt in and they want to start seeing investment opportunities, I don't have to go through the whole story and the background again. They already know it. So we can get right into the brass tacks on the investment itself. And what I see oftentimes is somebody launching a deal and it's like a one pager and a teaser. It's like, well, okay, what if I want to see the underwriting? What if I want to see the comp set? XYZ. And then you've got to go through all these hoops and steps. Just give people the information. And nowadays, what's cool is happening is between these podcasts like yours, social media, YouTube, you can understand and appreciate the different investment opportunities in front of you, and you can make those decisions yourself. I mean, the investor is a very sophisticated person right now, in my opinion, more so than I've ever experienced. So you don't have to kind of play this cat and mouse game with them. Give them all information, leverage social media, leverage multimedia. So we do a lot with video and drones, recorded scripts, recorded pitches, and it's just really made a huge difference for the ability to scale the company efficiently.
Yeah, without a doubt. And we talked about the inception of Excelsior Capital, which to me was basically the inception of Brian C. Adams. That's when I first started seeing your name pop up, was with the Grand Podcast Tour, which is something that we're very bullish on at Raise Masters and will continue to be. The podcasting medium. It's funny when Rogan landed that deal a few years ago, everyone was going crazy. Oh, this much money with Spotify. And a good friend of mine, I'll give him a shout out as well, host of the Cashflow Ninja, MC Laubscher. He's like, look, people are making a big deal about this, but this is just the first of many to come. Podcasting is also an industry that continues to exponentially grow. So to see how you kind of went from 0 to 100 as a thought leader in this space is something I've really taken note of, I've admired. And if there's any, again, advice or recommendations you can share with our listeners today on how you did kind of pull off going from unknown to known, I'm sure that correlated with the growth of the company as well. Tell us a little bit about that experience and how others can pursue the same thing.
Yeah. So when I started the business, it was ground and pound. My goal was to do 5 meetings a day and 10 phone calls a day. And I wouldn't leave the office on Fridays until I had those meetings and calls teed up every day the following week. Even if it would, what's that?
The inner athlete right there.
Yeah. Well, and I was hanging out with a bunch of old sales guys and, they were old school. And even if it was with my dad or my brother, like I got to have a phone call in the books. Can I call you 3:00 on Tuesday? My dad be like, sure. At his desk, I'm sure, speakerphone, not listening at all. But that was how I thought I should do the business, right? I mean, that was the way things were done. Get on a plane, go have lunch with somebody in Topeka, come back. COVID obviously stopped all that, right? It wasn't a possibility. The doors were shut. And so I started actually just becoming a really big nerd about content creation, social media, marketing concepts, and spent about a year putting together this infrastructure. The podcast was part of that whole process. And there's a lot to take away from it. You all are experts in it. A few kind of high level thoughts. One, most people in the business are so bad at it that if you just take it seriously and put time and resources and energy into it, you'll be a top decile marketer within the space very quickly. Most people are horrible at it. Another thing I would say is kind of to go back to that athlete mentality, the grind. Most people give up really quickly. I mean, I think like the average podcast show has 20 some odd episodes or something. So if you commit to it and you're intentional and you schedule them out, you never miss your publishing date, people start to really notice. I mean, I've had a number of folks, like yourself, I just had a tickler on the calendar to ping you every 3 or 4 months or something. So what? He says no, or he doesn't respond at first. Eventually we'll get there, right? I mean, a no today is not a no forever, and you can't take it personally. And so I think just being really intentional and thoughtful and having professionals. I mean, there are really good consulting advisors. We have some in-house folks now that help us think through all this. It's really important. And honestly, on the investor side, I think just having these basic things today is table stakes. I think it's expected that you have a blog, a podcast, a social media presence. You're creating content, you're creating communities and ecosystems to create value beyond just the investments for your LPs. I think that's just a given today. We all need to kind of step up our game, in my opinion, because there's a lot more that we could be doing.
Totally love it. That's a little 2-minute Instagram clip right there for content creation. So I couldn't agree more. And you look at man, this is a funny realization I had the other day, but I was like, man, that's so true. So some of the greatest of greats of all times, going from like Jesus, Muhammad, to MLK, whoever it may be, if you really think about it, this hit me the other day. I was like, wow, Jesus was a content creator. Actually, he was like one of the original content creators. So I'm not saying we're all out here to be the next Jesus, but those who move things forward the fastest and influence the most throughout the course of their lives are the ones who are documenting their journey. And getting, a lot of people will kind of play I'm an introvert card, and I get it. The more and more people like yourself, Brian, that I meet, I find that we all actually at one point in our lives were that introvert. And it just came down to finally having that moment where you say, hey, I'm going to hit record. I'm just going to do this. And as you mentioned, version 1 is better than version none. And if you can just be consistent with it, you'd be surprised how quickly you can become a pretty solid content creator. So I see
and
way in there. Yeah, go ahead.
I couldn't agree more. And also it's just important perspective for people. If you don't have all these other things, if you think it's a waste of time and that, you should just be focused on the investments, think about it from the investor perspective. That means the only time they hear from you or see you is when you're pitching them something. And it's a completely binary transactional relationship where the only time I call you is when I need something from you. Otherwise, you don't hear what I'm thinking, what we're doing, what's going on in the greater world. The way we think about marketing is it's a parking lot. It is a neutral zone where people can derive value from knowing us. And then at some point when they're ready to take the next step to talk about investing, we're ready for them. But it's a safe place for them to get to know us, to get access, networking, educational content, etc. I think that's really shifted the mindset about how we want to build the company moving forward.
Yeah, marketing is a parking lot. I love it. So speaking of the company, and I appreciate your patience here, talk about a no hard pitch environment. And I apologize, ladies and gentlemen, if you've heard the car horn going off in the background. I'm at an Airbnb right now. So we haven't talked about what you're working on right now. So I'd love for you to get an opportunity to kind of share with our listeners what you're working on, whether they're actively in the game or an LP tuned in right now and want to check out Excelsior Capital. Definitely want to open the floor for you now. And thank you for your patience and not pushing to sell anything on this call.
Yeah, I mean, I'm not a hard pitch guy. I appreciate the chance to come on. I'm a big fan of the show. And so it's awesome to get and talk to you. Yeah, I mean, listen, we keep it very simple, right? Direct deal by deal co-investment opportunities. So that's what we view as access. Yield, we're trying to solve for double-digit cash-on-cash yield that we send out in monthly distributions. And then we only work with taxable investors. So we don't work with institutional folks. So we're very focused on making sure that we're getting all of the benefits from a tax perspective that come from direct real estate ownership. Those are 3 things that we do. The way we do that is by finding commercial real estate opportunities in the Sun Belt, typically secondary, tertiary markets, where we're looking at what we call flex opportunities. I call it the mullet of commercial real estate. It's kind of business in the front, office, retail, forward looking, and then a party in the back where you've got distribution, warehouse, et cetera. So a typical opportunity for us today would be a $10 million multi-tenant flex opportunity in Tallahassee, Florida, where part of the building is occupied by the Department of Revenue for the state of Florida, so good credit. And the other folks are local regional users that are using it as a little bit of office and distribution to the back. They're typically service providers. So feel really good that they're, COVID resistant, recessionary resistant. Flex space has a lot of upside to it, in my opinion, because of the triple net leases, the lack of common area. We like to be single story, so we're not worried about chiller units, as many HVAC problems, et cetera. Elevators can be a nightmare. So a lot of these lessons learned the hard way through this, but those are the type of opportunities that we're looking at, and in growth markets, right? So we're looking at Texas, Tennessee, and Florida for the most part. We will go elsewhere, but that's our main focus. So I appreciate the opportunity to talk a little bit. That's all on the website. I'm not going to take up airtime on that. You can go check it out, and we're happy to show the portfolio and talk more about what we're doing.
Right. Yeah, that's what I was going to say next is the best URL for everyone to go to, the best website.
Yeah, excelsiorgp.com. And then I'm very active on LinkedIn. That's kind of our main social media. So if you look me up, we have a great kind of page, and we're very active on there. And you can see a lot of the investments we made and some of the things that we're working on as well.
Yeah. So love that, guys. Check out excelsiorgp.com. And you're in Nashville, and you said you moved there in 2007, maybe even 4 years before you got into the real estate space, or roughly speaking. Looking back on it, it seems like it was one of the most genius moves you could have made in regards to the market. What's it been like from 2007 to now, coming into 2022 and beyond, watching Nashville transform? Do you feel you got to feel like, oh wow, did I do this?
Yeah, I didn't do it. I think a lot, this is a whole different conversation, but Nashville has just exploded, and it's only going to continue, in my opinion. It's interesting. If you think about why that is, if you rewind the tape 25, 35 years, really Birmingham and Memphis were much bigger cities from a population perspective. And Louisville, frankly, too, was much bigger. Why Nashville, right? A couple of things. One, there was a really big public and political commitment to bring in NHL and NFL franchises. And it was very controversial at the time because they were public-private partnerships and bond offerings, which a very fiscally conservative place like Tennessee is not a huge fan of. But what it allowed for, people forget, we built the Predators rink on spec. It was empty. And we had to go and steal the Titans from Houston. And it was very convoluted. They were in Memphis for a year, then they played at Vanderbilt Stadium for a year. It was really a mess. But once we did that was in 98. Once we did those two things, we got on the map for corporate relocations because a lot of consultants wanted you to have a major sport franchise to check the box before they ever consider you. So that's what allowed Bridgestone, all these other groups, to have their Southeast headquarters or US headquarters here. And the other thing, obviously, is healthcare. Hugely beneficial for this extreme run up in healthcare. And a lot of the families that started these companies, to be admirable of them, they decided to stay. They didn't go to Palm Springs. They didn't just kind of fly off and do whatever. They've stayed in the community and reinvested. And so healthcare now, I think, is like 84% of our GDP. Wow. And continues to increase. But yeah, I mean, and now you look at some of these other markets that used to be our peers in the Southeast, and they're really struggling with brain drain issues. And, Nashville has continued to do well. We have some challenges, obviously, but there's a lot more to it than just, oh, it's this hot new place to be. A lot of these seeds were planted a long time ago by a lot of forward-thinking people.
Right. Yeah. And we've talked about this on the show before as well. Tennessee is kind of the one state that's the best kept secret besides Texas and Florida, as far as you could say tax law. I mean, a lot of different things from what I understand in the Tennessee, what's the word? you would know the word I'm looking for, having the legal background, but I guess just tell us a little bit about what's so favorable about Tennessee from a legal perspective and taxes and all that.
Yeah. So no state income tax, which a lot of people don't realize. And that's one of the main reasons Alliance Bernstein chose Nashville over Charlotte. I had the opportunity to hear Seth Bernstein kind of go through this thought process. He's a CEO. And so that's a big one. We used to have a state level capital gains tax that was sunsetted a year or 2 years ago.
Okay.
That's made a big difference. And then we have very flexible state trust laws. So a lot of family offices are looking to relocate their assets or their trustees or corporate trustees to Nashville or Tennessee because it allows them much more flexibility than other jurisdictions. Just as a data point, my wife works at a private all-girls school here, high school, and they just went through their application process for this upcoming academic year, and applications from out of state families were up 400% year over year.
Wow. There you go. So on that note, where are you seeing in Tennessee, for those who are considering moving to the state, what are some of the more desirable areas? Because I feel as though maybe what would have been ideal to move to even, less than 10 years ago, now there's probably new suburbs popping up, new spots. If you had to do it all over again, I recommend someone to check out a few different places in Tennessee that are just, simply nice and new. What are the names of some of those areas?
Yeah. So, just for perspective, Nashville's in the middle of the state, and we've got Memphis to the west, Knoxville and Chattanooga to the east. So we're very much in the Cumberland Valley area. Nashville is a consolidated metro government. So Davidson County is contaminant with Nashville itself. So it's a little bit funky. When you say you're from Nashville, it could mean, like where I live, somebody could live 45 minutes away and also say they're from Nashville. And so it can be a bit of a challenge, but the growth happening north and south, just to give you perspective, Huntsville, which hour and a half away, really great market. If people are looking to invest, actually, we could get into that, but it's almost become a bedroom community for Nashville. And if you go north to Clarksville, which is basically Kentucky, it's also becoming a really great community. So right now in Nashville, kind of proper, average, not median, average household price to buy a single family home is north of $500,000.
Wow.
So we have a huge affordability issue in Nashville right now. Like a lot of other markets, we don't have enough product. We have way too much demand. And if people want to stay in market like we do, we can't sell because we can't afford to buy. And so you're seeing what happened in Atlanta, which local people are going to hate me saying this, but exurbs, right? These suburbs, places like Murfreesboro, which when I moved here was a college town that I never went to, it's its own MSA now, right? Franklin, some of these places that are south of town especially are just booming, and I don't see it changing anytime soon. I think Middle Tennessee State University, where Murfreesboro is now the largest state university in Tennessee. So it's bigger than UT Knoxville. And so it just continues to explode. And I don't see, as long as we keep our political act together on a local level, I don't see it changing anytime soon. So it's a lot going on.
Wow. Yeah, ladies and gentlemen, there you go. Don't forget, you got Texas, you got Florida, but you've also got Tennessee, and you got Brian C. Adams if you want to pick his brain or reach out to him. I'm not going to go ahead, not going to sell his time like that, but I'm sure if you want to reach out to him and told you heard him on the show, he wouldn't mind it. So, Brian, thank you for following up and also investing your most valuable resource with us here today, your time. And to our listeners, the same. Thank you for investing your time with us here today on Dream Chasers, Interviews with the Future. Before we get out of here, Brian, any parting words of wisdom for our listeners?
So you talk about kind of grit and resilience and some of the themes that we've hit upon over the last hour. One of the kind of best sayings that I use with my kids and people I work with comes from the jiu-jitsu community, which is that a black belt is just a white belt that never gave up.
I like it. I'll write that one down here too. I think it was marketing is a parking lot. Black belt is a white belt that never gave up. And there was another good one in there too. I'm looking forward to going back through this. You'll have to get me that link as well. I know you referenced an educational resource. So Brian, thank you very much. That's what it was. I was like, I got to ask you one more thing. ExcelsiorGP.com is the best way to follow up with you, correct?
Yeah. Excelsior is the state motto of New York, where I'm from. It means ever upward. So that is how we wake up in the morning and think about building the company.
Love it. Awesome. All right, Brian, thank you. Everyone, thank you again. We will catch you in the next episode. And remember, in all you think, say, and do, take it to the next level.